All right, guys, welcome to our team call for Tuesday, August the 16th for the Wildflower Tribe. So tonight, before we get started, really quickly, does anyone have any recognition? I do. Sarah reached Emerald rank, so if we could congratulate her. It was like her first month, like really working the business, and I am so, she is she inspires me. I don't know if you guys realize that she like does her work at like 1 a.m. and does workouts at like 1 a.m. and also has 3 kids, one of them being like 6 months old and 2 big dogs, and her husband's away all the time. So like she's like, way to not let any excuses stop you. I mean, I am super impressed, and I just think that's so awesome, your dedication. She has like a notebook printed out. We met, and she's like always asking me questions, which I love. So if you guys ever have questions, you're always more than welcome. But yeah, I mean, she's killing it. So she's already at Success Club. She's hit Emerald, and she's like on a roll. So I know this is just the beginning. I'm so proud of you. I really just have to say again, I'm like just blown away by your dedication to yourself too. So good for you. And it's your second day of 21 Day Fix Extreme today too. So yay, I can't wait to see what your results are. Anyone else have any recognition?
I do. She's not on the call, but for our team, for Team Mountain Strong, which I invited my team on the call tonight, and most of them are out of town. I'm sorry, Shawn. I'm super excited to listen to this call tonight and meet it. But Laura Kendig hit Emerald this week officially, and she saw all of us at Summit, and pretty much it lit a fire under her ass, literally. And she is at SC8, and she is psyched to work and be part of our team, and I'm super proud of her. So, yeah, she's at Emerald. So, congrats, Laura.
Anyone else? Or anything? It doesn't have to be rank related.
You, Missy, it was your birthday. Happy 30th.
I'm old now, officially. Whatever. I think I literally, this is no lie, I was lying in bed, like, Googling how to make the best of your 30s. Like, I was like, I even Googled, like, 30, like, am I having a meltdown? Am I having a 30? Like, and I'm not. I think I'm okay. But it definitely shook me a little bit, I feel like. Anyway, okay, well, tonight Shawn is going to talk to us about tax stuff. I just think it's hilarious that this is how we met, because actually last year I posted like something like taxes has to be the best thing about owning your own business, and she was like, oh, I can help you. So that is the story, and then we just started chatting about this stuff too over time. But yeah, I'm super excited for her to talk to us all about taxes. I mean, I feel like somehow I pulled it together last year, but I definitely wouldn't have been able to do it without her. So I'll let her take it away. And thank you so much for volunteering to chat with us, or agreeing to chat with us, I guess.
Totally. So first, if just anyone has any questions, just go ahead and like type them up and I'll answer them. It's a lot easier, I feel, to have like tax conversations when questions are coming in, so that way I can just address them. Otherwise it can kind of seem like a ton of information and be a little bit overwhelming. But my first suggestion is, so when you guys has everyone done a tax return so far with like having business income? Have most everyone? Yes, no, some yeses, some no's. Okay, so most of you will be doing what's called a Schedule C in your 1040, and that's where you claim your business income and your business expenses. And so a great way to keep track of those expenses and a great way to go about it is either once a month or quarterly, depending on how involved you are and how much you're spending. Is to kind of make an Excel sheet. And so I suggest either depends on how you like to be organized. Some people like to do a tab for every month of the year, and then they keep track of all their expenses in each tab. So then at the end of the year, they have, January, February, March, every month categorized, and then all the expenses that they had in that month. And then you can go through at the end and kind of total those up and get them to your accountant, or you'll have the totals if you do your own taxes. So some of the things that like you guys should be taking deductions for, one is your monthly membership, so the $15.99 or whatever it is to be a coach. That is totally deductible. Second, your shake, totally deductible if you're running this as a business. Third, anything you buy for advertising or gifts for people, that is deductible. The only thing with gifts is it's limited to $25 per person. So if you spend $30 on someone's gift, you only get to take 25 of it. So that's just something to be aware of. Husband's shake deductible. Is your husband running it as a business?
Well, I mean, I'm running his account.
So technically no, because his shake is not necessary for you.
Just a minute.
His shake is not necessary for you to run your business.
Okay. And then is it 25 per person per year or per gift?
It is 25 per person per gift, and it's a maximum of, I want to say $100 per year.
Okay.
I will look that up for sure though and post that. Do we need to keep track of gifts are given to? No, not necessarily, except for the maximum amount. So you don't have to have like a name for every person, but if you give a gift to a person more than 5 times, then you're going to be over your limit. Yes. Just a second. Sorry.
Sorry, while she's gone, how do I send a message?
I do see it. It is beautiful.
Are you on the computer?
No, iPhone.
Tap the screen, go to participants, and then on the lower left will be chat.
Oh, okay, perfect.
It's super gross on the phone, but it works.
Okay, so some other things that are deductible. Travel expenses. So I know traveling's like not a huge thing, but anyone that goes to Summit, it's pretty necessary for you guys. It's your flights, you can deduct. If you had to pay for your ticket, deduct it. Lodging, deduct it. There's also something that's called a per diem rate. And if you don't want to keep track of your meals, you can take the per diem rate, which varies depending on which county you're in. So, whatever county Nashville is in, that will have a certain per diem rate. Usually it's around anywhere from $60 to $100 a day, depending on where you are. And you count that by nights, not days. So if you stayed for Nashville for 2 nights, you would get that per diem rate for the 2 nights. And that changes from year to year too. So other things that will be, I'm going to say that Beachbody On Demand, not really deductible since it's not necessary. That's just kind of like an add-on that you can do. And then Kelly and I kind of talked about this last year, like food, if you guys are doing like special menus, and clothes, if you're doing like a photo shoot for, to promote your business. I would just say, you can kind of do a little bit of that, but to use caution and not overdo it. So kind of use your best judgment. You can get but one thing I would do is like, don't buy those groceries with your other groceries. Do like a separate bill for them and keep track of that separately. Same with any clothes. If you guys want to do like a photo shoot or need pictures taken to promote your business, use it sparingly.
So workout clothes aren't considered like part of our uniform?
Not really, because a uniform is technically for something that you can't use it for anything else.
Okay.
So, yeah. There you go. There you go. Okay. And then something else to keep in mind is health insurance. So health insurance is always a big topic, and being self-employed, you can have a self-employment portion of your insurance deducted for having to pay for your own insurance since you aren't part of a company that offers it for you. So that's something to, make sure you provide to your accountant, or make sure that if you're doing it through like TurboTax or whatever, that you're getting that part of the deduction. So you should be getting part of your health insurance deducted, and then part of your self-employment tax deducted as well. Other things that you can use for deductions is your phone. Everyone who's taking pictures, listening to Facebook, phone is totally a write-off the whole thing. If you have a little space that you use for your home office for getting things done for your business, you can either keep track of square footage. So you would keep track of the amount of your office space compared to your whole home. And then you can write off, whatever that percentage equals to of your power, of your internet, your water, any of your utilities. Okay. I'm just going to read a couple questions here. So 25 per gift, max 100 for that person. You can gift to as many people per year as you want. So if I'm on 21-day fixed diet, my food for 21 days can be deductible. No, because you need your food to live. So you can't just deduct that. But as far as like food, if you're doing special menus for like the mason jar meals, or if you want to put together a menu that you think is going to increase your business, then you can write some of that off. You can't just write off the food you're going to be eating. So the performance line and 3-day refresh. So the performance line and 3-day refresh are not necessarily required. So, when you look at the Beachbody as a program, it's like you're drinking your shake, doing your workouts. So anything that's additional is not necessarily deductible. Husband's biz fee deductible. So here's the thing with husbands. If husbands are getting income, then some of their stuff, their business fee and their shake is going to be deductible. But if they're not bringing in any income, then you can't really deduct it for them. Unless they're going to do their own Schedule C and claim a loss every year. Does that make sense?
So if they're getting any income, do we have to do anything with it, or do we just leave it alone?
Yeah, so if they're not getting if they're not getting a 1099 from Beachbody, I just wouldn't do anything with theirs.
So, but what if they are?
If they are, then yes, totally, you can deduct those.
Okay.
Personal development, office supplies. Office supplies, totally deductible. Personal development, I would say not really deductible, just because it's not required it's not part of the Beachbody program. So that's just something we, aim to do to help ourselves continue on and be better, but I would say no. Yes, so put together a menu for a client and share, I would say yes, deductible food. So suggesting the LLC, I don't really suggest that unless you're making a ton of money. So if you're making, it kind of depends on the person. It depends on if you're filing a joint return or not, and your spouse's income. Doing an LLC has benefits, obviously. You don't have to pay the self-employment tax. And, you're paying yourself a wage at that point, so you'll be getting a W-2 and you're paying into the system. But when you get into an LLC, one, you're going to have to start paying an accountant to do your taxes if you don't already do that. And then you're going to have your personal tax return and your LLC tax return. And then, you're also going to have to be paying your federal unemployment, your state unemployment, workers' comp. So you're going to have a lot of added expenses with that. So I would say something to do if you're curious about whether that's something that's going to save you money is if you don't have an accountant, get one, and talk to them about that. And I always suggest doing it on a quarterly basis. So like halfway through the year or at the end of the third quarter, look and see how much income you've made. And if you find a good accountant, they should be able to, kind of tell you, like, as of now, if you've made this much income, this is how much you're going to owe. And if we did it as an LLC, this is how much you would owe, and this is how much you would be saving between the two. Does that make sense? Okay.
Is there like a generic percentage of our overall income that you could just give us a part to be saving out of our paychecks every week? Is that a reasonable thing to ask or no?
So it is and it isn't. And the reason not is because most of us, I can't say most of us, that would be a lie. Some of us have a spouse who is a W-2 employee, or we are already W-2 employees or whatnot. And so a lot of that depends on, one, how many deductions you're going to have. So if you're going to have profit or loss. Two, it depends on if you have a W-2 job or your husband has a W-2 job, what are they withholding out of their paycheck? So there's a lot of variables. So for someone like me, my husband has a W-2 job, I have a 1099 job, I put away about 25% of mine because I make about half of what he does, and he's claiming 0 for his withholding. Whereas like Kelly, I hope this is okay to say, but Kelly's husband has a W-2 job, and with Kelly's Beachbody, what he was withholding was enough for them. So it just kind of depends on where you're at with who's working and who's not, and if you're filing joint, if you're not. And
so can I ask like a question? I'm sorry, I'm being so annoying right now, but so my husband's W-2'd, I'm W-2, we both claim 1, and he thinks that I need to hold out 20% of mine.
So normally I suggest 25% if you don't have any W-2 wages coming.
Which we do. We both have. I have a part-time and he has a full-time W-2.
Okay. So my first suggestion would be is to reduce your withholdings down to 0. That's the easiest fix. And that way you don't have to be putting money away right now. It's just going to make your paychecks a teeny bit smaller. And then I would, hold about 10 to 15% instead. To be on the safe side. And then also, like I said, it depends on how many deductions you have and like how much money you're bringing in. Because if you're going to have a loss, or, your profit's not going to be huge, then you don't really need to be putting any away. Okay, let me see. Do we need to keep receipts for everyone?
Sorry, I couldn't say thank
That's
you.
okay. Do you have a cost for website? So do we need to keep receipts for everyone? I mean, everything. My thing on receipts is I hate paper bulk. So I suggest everyone just to take a picture of your receipt and then enter the amount into like the Excel sheet like I talked about. And then if you ever do get audited or, you know, have to show proof of a receipt, you can just send a copy electronically instead of keeping a shoebox full of receipts. It drives me crazy. And your accountant doesn't want your receipts either. How about a cost of a website? Deductible, yes. Website cost is deductible. Same with if you're paying on like for Facebook ads or anything like that to get your business, to grow your business, it's deductible. Phones were deductible, phone itself, monthly bills, both. If your phone is expensive, you can do one of two things depending on when you got it. One, you can write the entire thing off as a Section 179 expense. So let's say it was $600. You can just write that whole expense off. Or if you're already going to have a loss and you don't need to take more of a loss, then I suggest you depreciate it over the useful life of the phone. So, 5 years. And then yes, the bill is deductible. Okay, so I'm just trying to think of other things that are helpful.
Can I ask one more question? I sound like
of course.
Idiot, but when you keep saying, you don't keep saying it, but you've said it a couple times, if you're going to take a loss, do you mean like that we haven't made more money than we spent on Beachbody? Okay.
Correct.
Okay. So that would be the, otherwise I can write off my whole phone that I bought it during this time frame.
Yes.
Okay.
Yeah. You can write it off even if you do take a loss. I just suggest if there's no point to do that, it doesn't benefit you really in any way. And it would just be better, like if you were going to be profitable next year, to have some of that to take against your profit next year. Does anyone else have any questions? I'm trying to think of other things that I haven't touched on.
I have a question.
Okay.
And I hate money. It totally stresses me out, so I'm really bad at this stuff. But so you keep saying all these things are deductible, and it sounds awesome. But what does that really mean? Like how much actually comes off and that kind of jazz?
So it's dollar for dollar. So it is essentially like when you get a 1099 from Beachbody, that is your income. And then all of these things that are deductible are your expenses. So that comes off of your income dollar for dollar. The only thing that doesn't come off dollar for dollar is, I keep saying if you have a loss, because it happens quite a bit in these types of businesses, because most of us like to run them in order to create a loss so we don't have to pay so much in taxes. The only thing that wouldn't come off dollar for dollar is your home office expense. Because if you have already deducted so many things where you're at zero, then you don't get to deduct that home office expense.
I don't know if this applies to anyone else, but I would certainly like the reminder what the deal is with the home office expense, like how you factored that in last time for mine, because I have that lost and I can't even remember what we talked about with space.
Yeah, so there's two ways. So essentially what you do is you measure the square footage of your office space and the square footage of your home, and then you divide the amount of your square footage for your office divided by your home. That'll give you a percentage. Most people's is about 8%. And then you would take that 8% and multiply that by your utilities and your internet bill, your Mortgage interest, you could even do 8% of that if you're not itemizing and claiming that on the Schedule A already. And then, yeah, just essentially it's your utilities.
Mortgage, but not rent, right?
Right, and it's not mortgage, it's mortgage interest.
Gotcha. Copy.
And yeah, not rent.
More first, like I'm asking questions. This has been like so on my mind this last few weeks. So in terms of you saying that most of us run this to create a loss to reduce our taxes, is that just saying like until you get to the point where you're like, I want this to be my full-time income eventually, it's helpful to make it appear as if it's been a loss because then that reduces the taxes, basically.
Correct.
That's why we're writing off everything we can to appear like we've lost, essentially.
Correct.
Gotcha. Okay. That makes sense.
You can be super profitable and look not profitable on paper.
Okay.
And it be legal.
Rich dad, poor dad? What's that mean?
What?
Have you ever read that book? He actually he talks about that concept. He actually even mentions like network marketing as a great option to lessen what you would pay in taxes by just opening up a business to write things off.
Oh, that's cool. Yeah.
Right, but again, everything has to be taken like, you know, you can't go buy like a sports car, right, and then write it off.
I'm just saying, it was part of the book.
Yeah. So a lot of people do get in trouble for that. So I mean, like everything does need to be legit and, you know, business oriented or, you know, necessary to run your business. But
I know. That too. It's not like
you can find a lot of things to deduct to do that.
Yeah.
So, also like a computer, if you buy a laptop computer and, you know, you have to be posting from Facebook and that kind of thing. Same with like your phone. You can either write the whole thing off or you can depreciate it over a computer is 7.5 years. Or 7 years. So what if I take coaches on the boat? So here's what you can do with that. So technically, if you are trying to get someone to sign up as a coach and you wine and dine them, that's considered, as long as you're talking business, that's considered meals and entertainment, which you get 50% of that off. So if you are legitimately doing it as a business-oriented thing, then you can, yes, write off those expenses. But you only get to claim half of them. New workout programs we buy.
Like I got the 21 Day Fix challenge, but then now I want to switch it up with something else.
Right. Yes, I would say that is deductible as long as you're showing like, hey, I was doing the 21 Day Fix and now this is the one I'm doing. So yes. Sunscreen, no. Oh my gosh. Okay. So yeah, I think that pretty much covers everything. Like I said, one big thing to look out for is if you're not getting it is that health insurance deduction. You get to deduct part of that, and then make sure you're getting your part of your self-employment tax deducted that you'll have to pay. And yes, if anyone needs their taxes done, I can totally do them no matter where you are. So, but I think that pretty much covers it. I mean, if anyone else has any questions, you can just, you know, post them in the Wildflower Tribe as long as it's not something personal. If you need to do something personal, then you can just email me. But yeah, I think that should pretty much cover it unless anyone has any other questions.
Kelly, you're recording this? Are you going to post it? Is this allowed to be posted?
Is everyone fine with that? Is anyone not fine with it being posted? Okay. I don't think we asked anything like super personal. I think it was just my personalness anyway. So
Mine too. And I'm okay with it.
yeah, no, I will post it. I'm sure other people could benefit from this.
Yeah, it's I mean, I feel like it's totally confusing when you're like, I've always been a W-2 employee forever. So this is this whole writing off business is like,
And
Yeah, I mean, oh, sorry.
No,
I was just going to say, I would really, I mean, if this is going to be your, key go-to and you've always done your own taxes, I mean, I really suggest having someone do them for you.
we have an accountant, but I don't feel like she helps us at all.
Oh,
I mean, I've never really spoken to her in my life, so
okay.
probably need a new accountant. But
Yeah.
I've always let my husband handle the money, and so like now I just I want to be in control myself, I guess, and so
Yeah.
that's probably what I need to do.
Yeah, that's a good idea. Your accountant should be helping you, like, really, even if they just do your taxes, they should, be helping you all year round. And, if you ever have any questions, they should be answering them for you. And
is that part of is that extra fees if we want to talk to her another time in the year? Like, how does that work?
So, I mean, that depends on your accountant.
Right.
Some accountants can be super stingy and be like, yeah, my fee is, $175 an hour. And any extra time outside of me going over my tax return that I made for you, I'm going to charge you. So you'll just have to find someone that fits what you're looking for.
Right. Okay.
Yeah.
Well, thank you for all your information. That was wonderful.
Yeah, not a problem.
Yeah, thank you so much. I know this is something I feel like, it needs to be done at least yearly and probably next time earlier in the year. But we're super fortunate to have you to be able to chat with us about this. I know last year I was just so clueless and I listened to one call, but I was just too early in my business even. So by the time the end of the year came, I was like, oh God, I just know I've been saving my receipts. That's all I know. But yeah, I honestly hadn't even thought of taking pictures of my receipts. I think that's brilliant. So that's going to save a lot of wrinkly receipts. I hate those so much.
Yes.
Does anyone else have any more questions? Because I know we only have 2 minutes left, but if not, thank you so much, Shawn.
Yeah. And like I said, if anyone does have any other questions or has something personal they want to ask, just go ahead and shoot me an email and I'd be more than happy to help. So
cool. All right, guys. Well, thanks for hopping on, and thanks so much, Shawn, for chatting with us. And yeah, I'll see you guys next week, or Thursday. Bye, guys.
By the way, taxes are due April 15th. Even if you file an extension, you have to pay by that time. So Sarah Mack asked. So April 15th.
And also, Shawn's awesome, obviously, if you want to use her. Just saying. I'll plug for you. Bye.
Bye.